Good evening, good evening, good evening. This is Noble. Welcome to Insider Trading. Got a lot to cover tonight. Actually, I don't. I'll take that back. I don't have a ton to cover tonight. I didn't get as many stocks from my group. I don't know what's going on. People normally give me 25, 30 stocks to look at. I only got a few today. So that's cool. It's okay. I got something I want to teach you, something that I think will help to kind of brighten, expand what you think is possible, ground you a little bit more in the actual math that undergirds something that is incredibly popular that a lot of you guys still aren't taking full advantage of, options trading. So today is going to be like really simple. I want to keep it basics 101, but I want to dig into the math just a little bit. I'm actually working on the next week, I'll say next 10 days, I'll be launching, I'm doing a really cool, fun, interactive workshop designed to walk you through all of what you think is complex and complicated. And it's really not. It's fifth grade math. The concepts behind options are a little sticky, a little hard to get, but the math is actually pretty straightforward. All right. So we'll talk about that in a second. And let me step back for just 2 seconds too. It's such a joy to be able to do what I'm doing now. I was working in corporate America. I got my M.B.A. in 2008. I started making six figures for the first time. I was doing really well for myself. There's a statistic you might want to know. If you're African American and you can figure out how to make six figures legally before 30, higher statistical chance that you will become a millionaire. All right. So I was making six figures before 30. It really does set a track because you tap into figuring out this economy and figuring out how do you get to certain levels of income, right? I was working. I started trading futures. I paper traded for 8 months. I'm going to give you the story real quick. I paper traded for 8-9 months. I was terrible at first. Went to this conference out in Vegas. I learned how I finally saw an actual professional trader's playbook. Kathy Lynn. She trades Forex. I'm pretty sure she's still out there. She's written a couple books. I took her strategy. I digested it. I tried to understand why she was doing what she was doing. Here's the beauty of a system. Every single piece, every single question, how much size should she put on the table? When she's going to exit? How many trades if she loses 2 trades in a row or 3? When would she stop in a given time frame within a day? Everything was laid out. Every single piece of a system is already laid out. You just have to execute, right? So a lot of you guys, unfortunately, are trading without systems. You really don't have true, actual systems to approach this. You're going to struggle for a long time until you realize you need a system that's proven. You're going to lose money. Sure, losses happen, right? But this is like, right, this is similar to basketball. Nobody goes into a basketball game saying, I want to hit 100%. I want to hit every single shot. No, you just want to make a lot more shots than you miss, right? You want to have a higher win rate than your losses. I started with futures. I fell in love with futures because I was doing like $500 to $1,000 a day. And I really didn't even know that much, which is the tricky part about this profession. You can just put some money in an account, start trading, whoop-de-doo, you're a trader. Overnight, you got a new profession. But do you know what you're doing? Are you trying to master the craft where you can be still doing what you're doing years, decades later? Most of us don't approach this like we want to do it for 20 years. We approach it like I'm just trying to make some money during COVID. And that's the problem. That's part of the problem. I quit my job. I got real confident. I was making great money. I quit my job. I wanted to teach and trade. I started working with kids first. I did that for like a year and a half. During that time, oh my goodness, my confidence just dwindled to nothing. And I went through a series of years where I was just struggling, right? The reason I was winning at first because we were in a very low volatile market for like that whole year. I didn't really know it. I didn't understand volatility, right? So I've learned how to win. I can teach you how to win. The framework that I use, it is the most powerful intelligent, statistical backed method, right? So that's why I do my classes, because I want to help other people skip over all the years of suffering that I went through as a trader. Now, investing is pretty easy, but trading, ooh, different level, different ball game. So that's a quick story and a snapshot. Is, as you know, is is so much more I could tell you, but let's get to what you came to get today, right? What you came to get today. So let me pull up some things real quick. So I got two new live classes that are launching. I'm gonna just tell you right now about options. Options is September 16th. It's 4 weeks. It's live. It's intense. If you've never gone through anything with intense on the back end, I use that word for a reason. It's not so intense that you can't learn. Of course, it's designed for you to learn. It's also designed for you to stop giving yourself the excuse that you don't have the time. If you can commit to 1 month, I'll do my part. So we start September 16th on a Monday. It's like a meet and greet for all the students. It'll be a small class, probably usually like 10 to 15 people. I like to keep these small. I really do. The learning happens faster in small classes. You know this. You went to any sort of school where you had the big 300 people in a lecture room, and then you have like the little small 10, 15 people classes. Those are better. They just are. We're going to meet Tuesday for live class. Wednesday, you're going to get a digital something, a quiz, some more content from me. Thursday, you're back in class. Friday, you're getting something else from me to do on your own. Saturday, we'll have office hours, 11 a.m. We can talk about whatever I covered that week. Whatever you want to talk about is open, literally open hours, just like office hours, just like in college. You get some one-on-one group time with the professor, right? And then we start the next thing next week, right? So we're hitting it you almost have something every day. I give you Sunday and Monday off. Tuesday through Saturday, you're mine and I'm yours. If you're ready to commit to doing this for a lifetime. I don't even want to deal with the people that just think this is a get rich thing. Go find somebody else for that. There's a million people that's going to preach to y'all and tell you that you can get rich overnight doing this. The reality is it's going to take years to master this craft and profession, just like it takes years, if not decades, to master anything else. But you need a good foundation. You do. All right, so that's October 16th. It's end to end. We're going to cover all the terms. I don't care if you are struggling with your trading. I don't care if you're brand new. I don't care if you're actually making money. I still can help you to get better. Right? My system is all about precision, mastery, patience, clarity. It's radically different. It is. It really is. So if you're seriously interested, of course, go to the link, check it out. Watch the video, read every single word on that information page. Watch every video there. Watch the testimonials from students. Do your thing. No pressure. I just want to give you the best. All right. Okay. So that's the class, September 16th. Hopefully I'll see some of you guys there. Market analysis. So let's jump straight to it. Where's the market at right now? Where's the market right now? Well, let's go back for a second. Let's go back for just a second. Just a second. Let's review real quick. The more you watch me, the more you'll get used to how I look at the market. More you'll get used to my system. You can't fully learn it by watching these 2-hour videos. Like, there's a reason my classes are literally 90 plus hours of content, because I want to build you up. I got to keep it really basic and simple here. All right, so these are cool. These are fun for me because I get to connect with you guys, but I really want to help transform you that's in the class, right? So anyway, okay, let's go backwards and then catch up to where we are now. I just had an idea about Fibonacci. Should I do it? Wait, let me check for a second. Let me see how many people are on here real quick. Wait, hold on a second. Let me look real quick. Let me know where you're from. Where are you watching me from? Where are you watching me from? I do want to know. I always like to know. Oh, Yolanda Nash. What's up? She said legally is the key. Yeah. 6 figures legally. Yeah, right. Legally. All day. That's important. I'm not even gonna lie to y'all. I'm gonna say this real quick. It's really important to work with an educator, coach, somebody who, this is gonna sound elitist, I know, but I actually think there's a value to working with people who have degrees, master's level degrees in something that relates to trading and actual experience that connects. You cannot tell me you've mastered this, one of the hardest professions in the world, and you just study charts. There's no story that makes sense. Like, I was designing curriculum for thousands of employees at Bank of America. That means I can teach. I fell in love with stats because I used stats in analyzing the data in the job that I had at Bank of America. Right? So like stats and designing curriculum, it literally is who I am. Right? So I'm just saying. You need to study, you need to learn from people who value education and actually have one themselves. This is such a scammy, industry. But anyway, okay. Let's see. Annette. Oh, Annette, what's up, Annette? Annette's out in Pennsylvania. Annette. We gotta connect. Annette, how you doing? You gotta let me know. Y'all don't be letting me know. And I know. And see, my students that like pop up and just be like, "Hey," they be the ones just killing it. They don't even tell me how well they're doing until like we finally connect and I find out, and then I'm like, "Oh wow, right." So, Annette, what's up? Let's connect. Right, Mark, out in New Jersey. That's what's up. Let's see. Yolanda's in Houston. Oh, you in Houston? Okay, cool. Renee said, "Hey, bro, this is Misty. What's up, Misty? How you doing? Good to see you. I can hear you when I say your name. I can hear you. All right, Liz Shaw out in Virginia. What's up, Liz? Let's see, Yvette in Hampton, Virginia. Hampton, Virginia. I'm just thinking for a second. I'm like, wait a minute, Hampton? I did this thing with Coca-Cola when I was working in the ad agency. And I think we went to Hampton, Virginia for like, I don't know, Coke sponsored like some HBCU games or something. So shout out. That's what's up. I've been to Hampton like one time. And I was working, so I couldn't even enjoy it. Ed, what's up, Ed? Ed in ATL. Ed, what's up, man? Right Mark, God's Country, Jersey Shore. That's what's up. Let's see. Dre Swanson, what's happening, Professor? What's up, man? My guy. Shot-town all day. Cool. Okay, cool. I got a good group of you guys on here. I love connecting, as you can see. I'm a people person. I was like, man, I hope some people hop on today. Because I kind of got the link out to y'all a little bit late. I'll make sure Thursday I get the link for this up in the morning so you can like give me your stocks, blah, blah, blah. Okay. So a lot's been going on. The last few weeks have been interesting in the market. Let me go here. Do I want to go to? I'll keep it. I'll actually start simple and then I'll add a little complexity. So think about what I'm doing. Think about what I just said. Simple, and then I'll go complex. Why did I say that? I'm going to the week chart. Why the week? Because if we want to analyze this drop in mounts, we only have 1, 2, 3, 4, 5, 6 candles to look at. 6 candles to look at. If we go to the day chart, the chart that y'all love, because nobody's really ever asked the question, why does everybody look at the day chart? Is there another way to get better clarity? Yeah. Go to the week. All right. So 6 days versus 30. 6 weeks, 6 bars. Not a lot of analysis if you have the right system and tools versus 30 days. Should you have been short? Could you have caught this whole move down? Would you have gotten in too late? Did you read my post saying it's bear season? Internalize that meant you should just short everything right now. And then right when the market started to bounce, you started losing, and now you want to blame me because I said it's bear season. I explained it. I said bear season is simply, I'm going to show it to y'all real quick. If I go to the month chart, what is it? It's a matter of fact, I'm gonna take these Bollinger Bands, the one indicator, the one thing you need to really revolutionize your trading. I just give y'all a little sneak piece, but I give you the one, right? That one negative, one positive, positive and negative one standard deviation is a game changer. Oh, it's a game changer. It undergirds everything else that people think matters. All right, so we had August, September, October, usually the worst time of the year. I'll just show you the last year. I'll just put a box over the last August, September, October. That was here. And then the last one before that was here. And the last one before that was this little drop. All right. So clearly, something happens. historically, systemically, cyclically, sheesh, that's hard to say. And look at this candle right here. That is a monster of a hammer. That candle alone is telling a story. We talk about reading the charts. If you just go to the month chart, that candle alone right now is telling you a beautiful story. What's the story? The market pushed down really, really hard. Matter of fact, let me do it like this to make it clear for y'all. Let me do it like this just for a second. If we go here, this candle earlier this year, 2 weeks ago, that candle looked like this. It was a huge red candle. It was bearish. I'm talking about bear season. I'm telling you guys, long-term investors, don't really think buy. The VIX hit 65. That's amazing. I'll pull up the VIX for a second here. We'll talk about the VIX if you're brand new to my channel, new to how I flow. This candle no longer looks like that. That means in all of that bearish activity, bulls bought. We were buying. Right? That's a nice. So this candle alone, just looking at that candle, if we were to close like this right now, if we closed here, that candle alone on the month chart is screaming that the bulls have some strength. And they are not in any way, shape, or form trying to let bears push the market any lower than 10%, which is all that we did. We dropped 10% almost perfectly. Push right back up. This is what you want to see. But you got to look at more than a day chart to see it, right? So again, month chart, beautiful candle, right? It's telling you something very important. I'm going back to the month, back to the week, and I will put a couple things on here. So what's on my chart? You'll always see the same thing for right now. Next, maybe 10, 20 of these that I do. The only thing I'm going to have on my chart. The colors are real simple. I know they might throw you off a little bit, but don't even try to don't try to be super smart. If you see a sea of blue candles, that simply means that the color itself is telling me that it's bullish. It's a bullish trend, right? So that's part of it for my system. It's color. I use color. You see anybody with crazy colors on their charts, they probably learned it from me. Right. The two bands, standard deviation. I've been talking a lot about volatility. What moves the market? How do we make money? The core definition to volatility, what you need to make money. I actually just had a fun debate with somebody. Old school trader, been trading since the 90s. Don't even know the definition of volatility. I'm sure he's making money though. But would you want to do better? If you could be more precise, if you can get better, wouldn't you want to be a better trader from learning something new? All right, so volatility, we think of volatility as speed. You're actually thinking about the beta coefficient. Everybody knows Tesla moves faster than Apple. Everybody knows Apple will kind of, generally speaking, will move more percentage-wise than Walmart. Right? Walmart's beta is less than 1. Apple's is like 1.1. Tesla is 2. They're all compared to the S&P, right? So if the S&P is like the baseline, you get the beta coefficient, go on Yahoo. If it's above 1, that means it's going to make you, right? It's going to be more volatile than the S&P. S&P has a good year. That'll have, right, a good year plus some. Tesla's beta's 2. That means it's twice as fast. That means if the S&P has a terrible year, we drop 25%. Tesla can drop 25 times 2. It's twice as volatile. It can drop 50% in a year. Right? So that's speed. A lot of you guys think of volatility, you think of speed. Okay, that's cool, but that can't really per se help you trading. All right. The definition you need is volatility. For volatility is a statistical measure of price dispersion around an average. The only thing I have on my chart is an average and 2 standard deviations, which connect perfectly to that definition. A statistical measure. These are standard deviations. That's stats. As soon as you start talking standard deviations, you're talking about stats. You're in a stats class. As soon as I have to break down what standard deviation means. The yellow line is the average. Right? So I'm gonna go back for a second. Right here, what happened? What happened right in here? This was back in April. 6% drop. The VIX slowly spiked up to about 20. Market came down. That's the inverse relationship. VIX goes up, market's coming down. All right. I posted in my group Insider Trading on Facebook a couple, actually somewhere right in here. Before we got to the 6% drop, and we actually dropped about, let me measure it perfectly. We actually dropped, 9.8. So yeah, we dropped 10%. Right. When we were at maybe like 4%, I posted in the group and I was just like, yo, y'all realize that the VIX is slowly doing what the VIX does. It's very possible to be in front of these moves if you know what to pay attention to. We went 6%. We went to the average, right? So when I posted it, we had not dropped down here yet to the average. I would love to say, hey, we're just doing a regression to the mean. Everybody doesn't even know what that means, because y'all are using Fibonacci and MACD and all these indicators that just at the core, they don't directly connect to what trading is. All this is a statistical game. That's all it is. Every day there's the two key components of stats. There's uncertainty and variation. Nobody knows what's going to happen tomorrow or what the pattern will look like. This is stats. Literally, that's what it is. All right, so the indicators you use, you really want to, right? So that's why I keep talking about volatility. I keep kind of trying to push you guys to start examining, thinking a little bit different. And I've used every indicator you can name. This is the only thing I use. I take that back. This is the only thing I use, but that statistical volatility definition grounds everything I do, first in philosophy, right? So, okay. So we sped up. VIX spiked. Japan. Let's go here real quick for a second. I'm going to go to the day chart. Just to show, and I'll put a box around actually, I'll do this. I'll go to the 4 hour for a second. I want to show you guys real quick the night. All right. So this was a really, really steep, I think it was this night right here. Right. And that was what day was that? Was that the 4th? 4 or 5, yeah. So the night of August 4th, that's when Japan was, right, everybody was selling off in Europe, Japan, market dropped 12%. You had to wake up to it like, oh my goodness, why is the VIX so high? The VIX spiked up to 65. That's crazy. The last time we've done that was literally COVID. Since the lows of COVID, we've pretty much done nothing but go straight up. We've had, 2022, okay, yeah, gave us a little bit of challenge. It's really been pretty consistent, clean charts if we really looked at 2020 since now. This year has been very basic. We pushed up, we pulled back to the 20. We pushed up again, we dropped a little bit lower. We went to the 20, but went a little bit lower because of Japan. And there's some other factors, right? You guys know, whenever I say like because of one thing, I never mean because of one thing. All right. This isn't the show where I want to just talk to y'all about every economic factor. I want you to know how to trade and what to do. Right. So we had that really bad day. I'm gonna go back to I'm actually gonna go to the day chart now. I want you guys to see where that was. Right. So here's the beauty. Let me show y'all this real quick. I think this will help for anybody who loves Fibonacci. There's a lot of tools that work that people like. But I think if you learned to look at it the way that I do, grounded a bit more in statistics, you'll realize that a lot of those different tools that people use are really unnecessary. I want to give you a real quick example before I get to your charts, and then we'll do a little bit of options math. I won't spend a lot of time. Oh, because I already spent more time than I wanted to. Here. Let me do this for a second. You see how this was the lowest day, right? This was the lowest day. If we're here and you would have said, no, but where do you think if we push up, if bulls start buying, where are we going to? Annette would tell you, Misty would have told you, Dre would have told you, Noble Woods and any of his students would have told you. While it's possible to drop because we're underneath that bottom band and that's where all the downtrends really get going, like that's where that bearish volatility takes off. If we push up, we're pushing back up to the same place we always push up to. It's beyond predictable. You don't even have to think. Where are we going? Back to the top band. I mean, not the top band, but the closest band, right? Which is where? The bottom band, because we're under. That's where price statistically is going to move to. I could explain it. We can get a little bit deeper, but just for now, trust me, right? So that was really where if we push up, you already know that's where we got to push up and go to. Because all the uptrends happen where? The real uptrends happen up here. Above, higher, all the above average players have to get above the average. All the reversals, like when we change from downtrend to bullish uptrend, we have to cross over the average first. It's just like a team crossing over half court. It's literally the exact same metaphor mathematically. If you can play basketball, I can teach you how to trade. If you don't like basketball, I got to find another sport. Basketball works really well, though. It really is like the perfect. It's such a good analogy, right? So here's what I want to show you. We're here now. We're above that top band. This is where the volatility for bullish moves and really where all the bullish trends really start. It really is where they start fundamentally. Because when you're inside bouncing around the average, you're not elite. Right? Just think of it like think of it. I think probably one of the easiest metaphors is students. If you're not getting really good grades, you're getting the average, and let's just assume, right? Like the average is like 70. You're not elite. That's not great. I don't want to study with you. I don't want to do anything with the average people. Not really. Right? In terms of like me joining with you, so we right. So in between the bands is where it's where the reversals happen between uptrends and downtrends every single time. Even if you don't know it, that's what's happening. Every time. All right. So we made this cross, right? We made this move. Statistically, from lower probability downtrend where all the downtrends happen. Now we're back here really, really quick. All right. Now it was eventful if you're watching this, seeing it play out. Hopefully you were long. Hopefully you bought something. Maybe you were short first. Like, I don't really, care which side of the trade you were on, but the year is bullish. The quarterly's bullish. The annual chart is bullish. Right? So you should always be a bull if you have the skills to be bearish, to have captured some money on that downtrend. Right? That's amazing. That's dope. But by definition, shorts, I want you to think of shorting as short-term opportunities. Even a recession is like it's a downtrend on a month chart, but it's not going to last for years. We've never had like a recession that's literally lasted for years. We have 5, 6 bad months, market bottoms, and then we start making our way on back up. All right. Okay. So, what I wanted to show y'all was this real quick. Check this out. I just thought this was fun if you're a Fibonacci trader. If you went here, Fibonacci from the top to bottom. Oh, somebody was texting me. I was like, wait a minute. I know they're watching me live. Let me just, that was Bevy. What's up, Bevy? Stop texting me when I'm live, Bevy. Actually, well, you might need to tell me something. But anyway, okay, so check this out. I just want to show y'all this really quick. To make a point about these very simple +1 and -1 slightly tweaked standard deviations, right, to Bollinger Bands. It's a top band, a bottom band, and the average. That's all it is, right? Notice this. Notice how when we push back up to touch the place that all of my students know, we know when we're way under that bottom band, it's inevitable. We are going to come back and touch that bottom band when we're down that low, because nothing stays low forever. The same way nothing going up just continues to push up every single day for years. Everything you can trade is going to come back to its average. And before it even gets to the average, it's going to come back to that top or bottom band, depending on whether we're talking a bullish or bearish trend. Always. It's math. It's math. You can trust it. More than you trust me. You can trust the math. Right? So here's what's interesting. If I'm a Fibonacci trader, which I used to be, I probably have on some level mastered like 30, 40 indicators that I don't even use anymore. But think about this. Where did we touch? If you drew your Fibonacci from the top of this, from the high to the low, when we made that low, all right, and you said, man, I think we're going to go to the 38.2. The 38.2 was just the bottom band, right? That's all it was. It was just the bottom band. But here's the tricky part. Here's why I don't like certain indicators, because there's too much variability. If my guy Andre, right, Dre's on the call, right, Dre's on there now. If Dre didn't put his Fibonacci at the same points, let's say he put his here at this last swing high, then he still is like, hey, we just touched the 50 retracement. So for him, it's retraced back to the 50 when it made that high on 8.7. For somebody else, it's a 38% retracement using the same tool, using it differently, placing it at different places. Now you got variability. Every student of mine, I don't care who you are, if you put this negative standard, a -1 deviation Bollinger Band on there, everybody's looking at the exact same place. Everybody. It could be thousands of students. Uniformity, right? So I've kind of always moved that way in my teaching and my thinking and all the training from corporate America. Like, I'm just like, how can I teach one system that would literally give thousands of people the ability to all do the same thing for the same reasons, same entry, same target? That's really what I've been working on for like the last 16 years, right? So that's just fun. That's just a little fun thing to just kind of, right? And don't get me wrong. If you love Fibonacci, okay, use it. But if I put 10 Fibonacci traders in the same room, they're not going to give me the same trades. Some people like the 38, some people like the 50, some people like, it's all over the place. To me, that's what I've seen, right? So this is why my system, I love things like this that are just really grounded in something. It's a bit more of a sophisticated math, right? So, okay. Let me go back to the week. I went to the month. Let me go back to the week chart. So we gapped down, really, really strong move. Got back above the average really quick. That was a beautiful sign, great sign. That's what you wanted to see if you're bullish, which you should be bullish, right? Just generally speaking. Last week, we got above the top band. Where do you think we're going? It's not even a question if we're going back to the highs. That's where we're going. Am I saying you should hop in some calls tomorrow? Oh, matter of fact, now that I just said calls, beautiful segue. I'm going to look at your stocks in a minute. I will. Matter of fact, let me actually see what you guys are saying, because I keep hearing like some pings. And I'm like, what are they saying to me? So give me 1 second to pull it up. See what y'all saying. Oh, Christopher Johns, what's up, bro? You in New Jersey? I didn't know you were in New Jersey. All these New Jersey people. I got somewhere to visit. I should have some places to stay too. I'm that type. I'm like, yeah, where you stay? I'm coming to your house. All right, I want a home cooked meal. Anyway. Michael Little, Birmingham, Alabama. With you, fam. I need to get in your class, waiting patiently. Thanks for doing what you do. Oh, man, I appreciate that. A lot. I'll reiterate again, for the options class that's coming up, September 16th, the link to give the information. I want your email address, of course, because I can keep in contact with you, send you things in the future. Maybe now's not the right time. I don't really care. Whenever you're ready to commit, I will be here doing this for the rest of my life. Because 16 years ago, I committed to mastering this. I didn't know I would be here. I didn't even really know I would be teaching. I was just like, I don't know what this market thing is, but I have to get this for myself and my future family. I have to. There was no other option for me. It took a lot longer to get here than I thought, but it makes sense, right? It takes about 10, 15 years to master something with daily practice and some suffering, because there's a cost to going through. So, well, my mother always says, right? She's like, there's a going through you got to go through. It's kind of like a spiritual thing, but it's just, it's the same process, right? To really master, to become great at anything, you're going to have to suffer. And I've suffered for years. I've lost every way you can lose, which is why I can help you win and see things clearly, right? So, Michael, I appreciate you, bro. let's do this. We're here. Market has reversed back up. We're right there at the highs. Now, are we going to be at like 600 in a month? I don't know. We have some reports. The Jackson Hole Symposium, Google that, is coming up. It's a full day symposium. There's a couple report things happening. So like Wednesday, Thursday, Friday of this week. Just be patient. If the market does get a little shaky, if we start to pull back, if we have a really bad day, just relax. Because, and I'll show you this really quick. Relax if we have a bad day. Because of this. Because if I go to the month chart, we're way above that top band. That's where I want to be. That's where you want to be. Every single bullish trade that I take. If it's not a reversal, I only teach two trades, a reversal and a trending trade. The reversal kind of happens as we start to go from band to band, and there's some detail you need to do that well, consistently. But up here, this is where all the trends happen. All of them, on everything, on every time frame. Right? So I probably could get away with saying this. Even if you literally have no idea how statistics works, but you're a decent trader who's ever made money, you were buying, and whatever time frame you were on, you were buying above the one band and didn't know it. That's why the prices kept going higher. They're always higher here. It's the strongest volatility. Right? This is where the legends are made. This is above the average. It's above the average of the average. This is the A+ pricing. This is A+ volatility. Right? And so because we're on a month chart, one bad day this week, you should not be worried. You shouldn't. If I go to the quarterly, are we above the one? Yes. So the quarterly person, the person thinking about leaps right now, you're in a perfect place to have already been in the trade, right? This is like that window of, hey, this is where quarter after quarter you can expect these bars to continue until we get back inside the bands, and then you probably should chill and relax because we might be reversing, right? And then the year is up, but that's like too long. That's probably too long, right? So when the week is above the one, that's such an amazing thing. It's statistics telling you we're in a good place. And then you look at like a quarterly, the monthly and the quarterly are like in that. Just stay bullish. Stay bullish. The data supports it. Even if we had a bad week this week, let's say Wednesday, Thursday, and Friday we drop. Okay, cool. We drop Thursday, Wednesday, Thursday. It ain't over. It's not over. We're still bullish on the longer time frames, right? That really matters. So hopefully that helps, just to give you guys a little like relax this week, because I know, again, the Jackson Hole Symposium, Fed speaking, right? Wednesday, I believe at 2, FOMC, which is really the Fed talking. Federal Chair Jerome Powell is going to be doing his thing. Okay. So what I want to do, let me give you a story really quick. Real story happened this weekend. Oh, snap. Oh, man. I had a little acai bowl that just somehow totally spilled over. So anyway, sorry about that. But yeah, I did just taste that. It's good too. I was talking to a friend of mine, and somehow we got into a conversation about straddles and strangles, which are slightly more, they're considered advanced option strategies. So think about this for a second. I won't even make this long because I really wanted to jump to your charts. And I'm shortening this from what I initially wanted to do. I want to give you one really good example. I'm actually working on a really, really fun interactive workshop. It'll be launched within the next 10 days. Watch me Thursday. You'll definitely get the details on Thursday. It might be free. I don't know. It's worth something, but I like testing things first before I put a cost to them. It might be like $100, right? But I think it'll really, really, really help you guys like tremendously because of this story. And I've had this happen 2,500 times since I started teaching options. We were talking about straddles and strangles. She said, I don't get it. I said, what don't you get? Like, help me to understand what you don't get. What do you think it is? She was like, well, you're buying a call and a put. You're going long. I want the market to go up, but I want the market to go down at the same time. How does that work? Like, why would I do that? I said, do you realize how powerful options are? Think about this for y'all for a second. When you buy a call, you're long of a stock. You want it to go up. You're optimistic. Your indicators have told you it's the right time to buy. You just listen to me saying the market is bullish. So you're like, okay, even though we might have a potentially rough week, the last few weeks, 10% drop. It doesn't even matter. Nobody's going to care about this 10% drop years from now. You won't even remember it months from now. It wouldn't have really mattered, right? We're still bullish. We've been bullish for the last 80 years, right? We have. We've never touched that bottom band on a year chart, ever. She said, I don't get it. I said, do you not get the concept or do you not get the math? And then you got to help me figure out how to teach you. How do you learn best? Do you need more like examples? You need me to like explain metaphors? You need me to draw it on the whiteboard? I drew it on my whiteboard for. Or do you need the math? What I've learned about myself with options is sometimes I don't get the concept. But if I can get the math, which is 5th grade math, then I get the concept. And in other strategies, sometimes I get the concept and I really don't. I have to work a lot harder to get the math. Right? So, this workshop that's coming up is going to be really dope. I'll give you a little sneak peek today. And again, just basic numbers. And actually, matter of fact, I'll show you. I'll pull up something to show you, give you like some actual math, like real math for a second. But imagine this. Imagine being confident, having done this dozens, if not hundreds of times, and being really aware of how you can place a straddle or strangle strategy. And I'm going to go to strangle for a second. All a strangle is you're buying a call, but you're also buying a put. And this is the beauty of options. You can't do that with just buying stock directly. I can't be long and short of Apple in my account. My long-term account, I cannot be buying and shorting at the same time. Options, you can do it at the same time. Crypto, futures, foreign exchange. It's different. That entry and exit are the two numbers that matter. With options, though, because how options work, because options gives you options, and this blew me away. I actually thought I created strangles. This is how crazy I was several years ago. I was just thinking deeply about it. And I was like, well, what if I buy a call and I buy a put at the same time? As long as one wins and makes more than the one that loses, I'll still make money. Does that make sense? Mathematically, yes. Yes. If I buy a contract for 1,000 going long and I buy a put for 1,000 and the market totally takes off and goes straight up. Yeah, I lost my $1,000 on the puts. But those calls are going to be making me some money. As long as the calls make more than $1,000, it'll cover my $1,000 loss. And I still make money even though I really did not know the direction. Even though I really didn't have the best system for how to do this. Even though I don't even know what the hell you're talking about when you say standard deviation. That's the beauty of options. You got to get beyond the basics. You got to go beyond just buying calls and puts. And here's why. Calls and puts are technically they have unlimited potential. You can make 1,000, you can make a 10,000% return. But they also expose you to maximum risk. They're the riskiest. And I know it's weird to say that they're the riskiest because there's like, wait a minute, no, but that's the basis. That's the basic first thing you learn about options is calls and puts. Yeah. But because you have unlimited financial potential in them, you really have no way of like metering out the risk. Right. And so some of the more advanced, quote unquote, advanced strategies, they don't give you like unlimited potential in the same way, but they give you like a more sophisticated approach to managing the risk of the trade. And think about this. Let's keep it super simple. Super simple. When matter of fact, let me pull up my charts so you can see it. All right. If we're here, I'm gonna go back. If we're here, we go back to this day. All right, this day. If you said, man, we get above this day, I'm going long. Right? Let's just say that was your mindset. The VIX hit 65. I know when the VIX spikes, it's time to buy. Whether you bought one share of something, options, contracts, I don't even care. Let's just pretend for a second. If you right here above the high of that candle said, I'm going long, you feel really, really amazing right now. Right? So if you thought we were going to drop and go lower, though, even if you gave those contracts a month or 2 months, the time that you gave the contracts don't really matter. You're just going to keep losing. Why? Because statistically, where are we? Above the band or below? We're above. That's where the trends take off, right? So people tend to think that like the more time I have with options, the better. Yeah, theoretically. But if you don't have this level of like crystal clear, somewhat just a pinch of statistical understanding, why would you, if you had bought puts, why would you still be holding on to puts right now? We're not about to go back down in the way that you think. Right. And so my second point is this. Let's say you were down there. Let's rewind back. And let's say you were like, no, I really don't know. Bro, I mean, I know what you and your cousin, like all these different educators, I know what y'all teach. But I just don't know, man. Like we got hit so bad and then it's bear season. It's like, right, I know we can go lower. If you're there and you really either don't know what to do or maybe you have a system, but you still just want to use one of the more advanced options strategies, you can go long and short at the same time. So what I'm going to do real quick is I'm going to walk y'all just real quick through the math to show you. Now, here's what you already know. The puts, there's no point in me even talking about the puts. Because if you bought puts, you would have lost. Right? Like we went straight up. So no put, regardless of the strike price, regardless of how long your contracts were, you're losing and probably going to close those contracts right at zero with no value, like old molded milk that has spoiled. Time decay. The time doesn't matter now. Right? We're about to be back at highs. Right? So I don't even have to really do the math on the put side. So let me pull this up real quick. Hold on. Let me just do this real quick. And again, this is just like a preview of where I want to take you guys when I do build this workshop that I need to build real quick. So here's what I want to do. I'll grab the numbers and I'll kind of calculate the math for you. But here's what I want you guys to think about real quick. Here's what I want y'all to think about. Matter of fact, I got to go backwards first. Let me go backwards. I got to go backwards. So again, let's take that day. Let's just say we open pretty much at 510. You woke up to this terrible news. You just lived through it. I lived through it. The VIX was at 65. You found that out real quick. We posted it in the group. If you watch any sort of channels, everybody was talking about the VIX spiking, right? Okay, cool. Are we about to fall off a cliff and drop? Or are we going to pop back up really hard in 2 weeks? You didn't know. Nobody knew, like factually knew. We're all playing a game of probability. What's most probable to happen? What's happened the last 85 times the VIX hit 65? Did it drop or did it go? Like we're playing a game of probability. What's most probable to happen? So that's a part of the statistics behind it. But then you got to actually be able to pull it up on the chart and know, right, what to do. So again, we're just pretending on this really crazy day that we all experienced. You just were like, Noble, I have no idea what we're about to do. If you understood a strangle, you could have went both directions. And the math I'm about to give you is probably going to blow you away a little bit. But I need to get a target first. So let's pick a strike price. Let's pick a strike. Let's keep it real simple. All right, let's keep it real simple. We were at 510, right? That's where everything cracked open, 510, way down here. All right, so that was the day. We were at 510. Now, which strike price would you have picked? 510 calls, 530, the average, 540. What about 550? What about back at the high at 565? I guarantee y'all, there are people right now who are so relaxed and happy and chilling. And I should have did it because I know how to do it. I'm mad I can't like give y'all like my actual right. Because I used to run strangles a lot for earnings, and I need to do them more. Right, that's literally a part of why, right? Even this workshop, why I want to do it. Right, but I love them. I love them. They just make sense. Right. So let's do this. Let's go all the way up to 565. Now I know you're like, no, but we were at 510. We were here. So if you bought 565 back at the high puts, what does that mean? First of all, it just means that whoever did this believed that we would be back at the high. That's all it means. Yeah, it was bad. Yeah, okay, cool. Yeah, blah, blah, blah. The month, the quarterly, the yearly, all bullish, blah, blah, right? There's more evidence, more reason to trust a bullish move than a bearish move. But emotions take over. You wake up to all this bad news. You're like, oh my God, I got to short some. I got to get out. Right? We get like trapped in the moment. No, relax. Think bigger. Relax. Look at the bigger time frames. We're bullish. We are. Even COVID, really bad month. Right back into the uptrend. Right? So let's say you bought the 565 calls. Now the question would be, how much time did you give them? Right? So I'm going to go to the week chart for a second. You know, if we're looking at the week, that was here under that bottom band, you probably would have been scared. Because you're like, oh, no, we're under the bottom band. Yes, I know we're under the bottom band. We're going both directions, though. So guess what? If we fell off a cliff, your puts would have made money and probably would have made you more money than your calls. You still theoretically would have made money as long as the market moved. As long as the market moved. So let's do this. Let's say at that point we bought calls 565 and gave them 4 weeks. I know that's not a ton of time, but if you understand the basics about options, you kind of know where I'm going with this. 565 was way out the money. So that means those contracts were dirt cheap. Ooh, they were cheap because we just dropped. So again, even options is a game of statistics and probability. When the market is going down, the calls are cheaper. When the market is pushing up, the calls are more expensive because we're going that direction. There's a higher probability we'll keep going that direction. It's all statistics. Literally, that's all it is. Probability and statistics. That literally is what trading is. To me, it should be to you too. So, okay. I gave y'all that. So you got the trade now. Right? Y'all with me. We're going back in time. And look. And for those people who are like, I mean, most of the people watching me are like, you know, y'all are good people. Y'all not like trolls just watching videos to try to, you know, find loopholes in everything somebody says. I'm going backwards in time, quarterbacking, as some people might call it, right? To like give you an example because it just happened. And it's going to happen again. The VIX is going to spike up again in the next 12 months. The last time it spiked, April. This is August. 2 times this year, VIX has spiked. It's going to do it again next year. You'll see me doing videos again, right? So, okay. So, you got the trade. We didn't know the direction. Throw direction out the window for a second. We were buying out of the money calls and puts. Now, I know we probably could go with more time, but for now, just, I'm going to give them a month. I could go further out, but let's just do a month. Right? Because once the VIX spikes that high, it's not going to stay up at 65 for a month. It never has. Even COVID, terrible month. We didn't stay down there at those lows for a month. We hit those lows and rocket ship shot back higher. Right? So there's some like fundamental understanding of a little bit deeper here. But anyway, so that's the trade. The puts I'm not even talking about. We don't even have to worry about them. They lost. So we don't even care about the puts. How much money did we make on the upside though? 565 we would have bought here. What was it? 85. So that's 1, 2, 3. What is next week's date? Next week is the August 30th. Okay, so let me come back here. Let me find real quick. Let me find that 565 call. Let me find it real quick. I can't find it. I'm trying to find Thinkorswim. Where the heck is my Thinkorswim? Oh, okay, there we go. So I'm going to August 30th. Y'all can't see it, but trust me, August 30th. I'll pull up the chart to show you how to calculate numbers. 565. 565. Where's 565? Okay, 565. Bam. Ooh. 565. Okay, so that contract right now is worth $2.53. $2.53. Now I'm gonna pull it up. Let me show you here. All right. I want to actually put and what day was that? That was what day was that? The 5th? I think that was the 5th. Let me grab the date again. I gotta make sure the date. I want to show y'all. Match this up. Yeah, the 5th. Okay. So this, what you're looking at now, is it's actually the contract itself. So this specific 1 month out during that really bad day, you didn't know the direction. Oh my goodness, this dude named Noble just told me the VIX usually when it spikes does not stay up there. We're gonna drop and keep going lower, or we probably gonna get a quick bounce. You don't know which one, but the year market's been bullish, blah blah blah. Right? So some context. But again, nobody factually knows what's going to happen. We're all placing intellectual, probability driven, based on, you should be trading based on something. Hopefully it's statistics, some form of data, math, something. That's what this is. Right. So this is the actual, that specific option itself. It has its own price fluctuations. So we're not looking at S&P. We're looking at this specific contract. Right. So before, way up here was $11.14. That's when the market itself was going higher. When the market started dropping, the value of the call went to nothing almost. Right. So let me just give you the number. This should be fun. I don't even know what it is. I literally just thought of this like before class. I was like, man, let me show them what's possible, right? If you just know a little bit more and aren't afraid of the math, which is why I'm doing this workshop. The 5th, where's the 5th? The 5th is, okay, so the 5th is right here. So if you'd have bought at the open, at the open on the 5th, month out, 565 back to the high calls. The price at the time, that option was 32 cent, which means times 100 shares. Every options contract, you're basically leveraging, borrowing, if you will, 100 shares. Right, so 32 cent times 100, it was $32 for one contract, $32. Percentage growth from there to the high from today, 723%. Let's just say 700%. So here's the beauty. If in the future VIX spikes up to 65. You remember this video? I'm trying to make y'all money in the future by teaching you something now based on something that just happened. Because all this stuff is the same. Just the same stuff happening over and over and over. It really is. And you've been doing this as long as me. You like, it's really like none of this stuff is all wow, spectacular. It's the same stuff happening over and over and over. Again, we just don't see VIX spikes often. Every time we go up to 65, the market goes right back up. Because 300 and some million, however many people work in this economy, don't go to work to not create value every day. The market is bullish by it's designed to be bullish because we as human beings want to create value and things that matter, and we're competing. So capitalism, in that sense, even though it started based on slavery, is good. It's the best economic system we've been able to create. Right. So here's the math. Your puts, if I spend $1,000 on puts, I'm gonna just keep the numbers, whole numbers. If I spent $1,000 on puts, I would have lost my $1,000 because the market went up. But the 1,000 that I spent on my calls would be up 700%. That's a multiple of 7. So now it's just simple math. My calls made $7,000. It's really like just 2 trades at the same time. You're just placing 2 trades at the same time. My puts would have lost 1,000. 7,000 is what I made. minus the 1,000 that I lost on the put trade, or the put half of my trade, is 6,000. So you made $6,000. You didn't know the direction. The trade cost you. How much did it cost you? The calls were $1,000. The puts were 1,000. That's 2,000. You made 6. You still made a 300% return, and you did not know the direction. That's why you got to trade options. That's why you got to learn how to get beyond the basics. That's why you need to get into the statistics. That's why you need to really understand the VIX. That's why if you commit to this thing that you love thinking about, talking about, like wherever you are in your journey, I would just encourage you to take your commitment level to another place. Because when I tell people about strangles, they're like it's mind blowing to some people. And then a lot of people can't like really process the math, just kind of talking it out. And I get that, right? Like it took me a while to like almost accept it. Like human beings are weird. Adults are weird. Like when I was teaching kids back in like 2010, they just absorb everything you tell them. You tell them you can go both directions. They like, cool, I can go both. Like they don't question it. They just absorb. Adults are like, why can I? It doesn't make sense for me to be able to go two direct. I shouldn't be able to do that. I can't. How do I make money when the market is going down? I shouldn't be able. The market, y'all, it's just it's creative genius. I know we think like music and the arts and dance, like we think those are like the best of human creativity. This market is literally the best of our creativity, and is making the whole world wealthy. The people that tap into it. There's no way you can study this and at some point not just get the right tools, coaching, community. If you just stay consistent, commit to it, you'll find the right everything that you need. Let me see what y'all saying in the comments real quick. Michael Little said, "I'm ready, baby. If it was tomorrow, I'm in." Right, Mark said, "Great information, dope." Yolanda said, "I need this skill set, Noble." Yeah, you do. Okay. Hopefully that was fun. I know I didn't have like my slides and animation and all that stuff, but I'll make sure Thursday y'all join me Thursday. I'll let you know when this workshop is, and I'll probably do like a couple of them because I usually try to like perfect a workshop. So stay tuned for that. Check the link in this video for if you're interested in the class, you want pricing. I got multiple options. You can make one payment. I give you a little discount. You can make two. I think I stretched it out to 3, but I'm also using for the first time this third party vendor, if you will, called Klarna, which does a little soft credit check. It doesn't impact your credit. You can stretch the payments out 6 months, 12 months, 18 months, 24 months. All right. Class is premium. I wouldn't say the price. I'll just say it's over 5,000. A little bit over 5,000, which honestly is a steal for what I'm teaching. But I know how this goes. I'm not like known yet. I haven't blown up, blah, blah, blah. So I still want to make it very affordable for just working people who are not paying for the brand of Noble and a whole bunch of followers and all this stuff. You're paying for me. With me, every dollar is well spent because I'm actually educating you. That's all I want to do. And I challenge myself to make sure I'm getting better with every class. That's why I keep doing these live classes. I could just stop and run ads and do all that stuff to just like a previously recorded thing. No, I want to like, I enjoy the live aspect of teaching. I get better every time. All right. And then I learn how to best teach my system. Because it's, it's a little bit of stats. I don't get that deep. I don't. All right. So, cool. So let's do this now. Let's jump to your stocks. See what you guys want to look at. I got to pull up something real quick. Let me find it. Let me refresh this real quick. So again, if you're in insider trading, you already know every Monday and Thursday this month, sometime before 8 o'clock, you're going to see a post that says, "Hey, give me your 2 stocks." Right. So today I only got a few, but I'll take a few from you guys as well. Let me write these down. Let's see. We're gonna take a look at NVO. Actually, so people give me two. That doesn't mean I'm gonna look at both. That means I'll pick one or the other. If I only have a few, then maybe I'll do a few more. NVIDIA, Amazon. Okay, I got a few there, and then let me see. Oh, cool. Let's see. Christopher John said they're perfect for range bound breakouts. If you're not sure if you're going down or going up, you don't have to lose your whole premium for the losing side. You can cut the loser for a percentage. Yeah, and even in my example, you would have known. Like, you didn't have to sit and watch your puts go to negative 99.999 if you gave those a month too. You could have cut those once. Like, it's like, yeah, I think we on our way back up, right? So again, a really good system would have helped with that as well, because there's certain things happen every time we go from downtrend to uptrend. There's literally a sequence of like 6 things that happen. People just don't know the sequence, and it's based in math. Right. So even though we didn't know which way we were going, after step 1 said, ooh, I think step 1 towards the sequence of going back bullish, getting to that top band. And then step 2 happened. And then step 3, it's like, we're probably we're going back up. Right. At some point during that move, it becomes pretty clear. Bulls are right. Even if you just were like hoping we get to the average, even that was like huge. Right. So yeah, you could have cut your puts, lost less on the puts, and then your overall total percentage would not have been 300. It might have been 350 or 400 if you cut the puts early enough, right? Without getting kind of like, without doing too much, right? And even if you just left it alone and didn't do any real management, you'd still be in those contracts right now. Up 700%, total trade up 300%. Did not know the direction. That's the beauty of strangles, right? Okay, so cool. Uncultured currency. What's up, my guy? What's up, bro? Nike. Said just share the video on my channel. Dope. Appreciate that, man. You know I do. NVIDIA. Right Mark said NVIDIA, I have 750 shares. Yeah. I know you feeling good. I know you're feeling good. PayPal. Okay. So I'm gonna add Apple, Nike, PayPal. Apple, Nike, PayPal. Okay, let's do this. I want to do one little extra thing. Who is that? Mark. Mark gave me Nike. My cousin Joel, who we were like trading partners on futures. That whole futures journey for the first few years, like that was me and Joel. Like we're brothers for life because of that fire that we went through, right? When he does his lives, he'll ask you guys for a time frame. I like that. I hadn't been doing that. But for the folks here that I can talk to, so Yolanda, Right Mark, and Mark, if you want me to look at a specific time frame, because it's the time frame that you generally trade, let me know that too. If not, I just tend to do like quarterly, everything's bullish, and then I'll go down to like weekday. Right. So I kind of dance around, but I like when my cousin does that. He'll ask for like which time frame you look at, because maybe y'all don't look at the day. Maybe you like, man, I want to see the 4-hour view. Okay, cool. We'll look at the 4-hour. Same statistics are working on every time frame, right? The math doesn't change. It doesn't even matter. Okay. Go back here. Okay, so TJX. Matter of fact, let me check something real quick. Hold on. No, I'll stay here. Okay, TJX companies quarterly. Let's look at the quarterly. You already know what Noble loves. A sea of blue candles above the one. That's money being made. That's great volatility. That's strong volatility, not mild. It's not the average player. No, these are all-star. This is like the all-star volatility that you want, right? I won't say it. Y'all know I struggle with like the words easy and predictable. Just because I don't want to be that dude who tries to sell people on how easy this is. No, But when you really get grounded in just right again, this Noble Woods method, the statistics that I'm talking about, and really, really fully understand those deviations and what they mean. And I'm only talking about the one. I could talk about the two or the three. All right, I'll just give y'all the one because this is like the one to just see the trend super clear. We got to be above the one. That's where like all the money making really starts. All right. So quarterly chart looks beautiful. All right, bullish. Week chart, where we at? So this is interesting. I try to find something interesting on every chart. I don't know their beta. So whoever asked me about this one, look at their beta. I'm curious, but this drop was 7%. Okay, so that's pretty close. It's pretty close. So what I was thinking, to give you guys like a little insight into my brain at the moment, I was thinking, this stock or whatever it is, I don't even know what this is, did not get down here and did not match up with the S&P. So I instantly went to wonder, is their beta higher than 1? Is it like 1.5? Like this seems to be one of those stocks that even when the S&P got hit, it did not get hit as hard. Now maybe because of what type of stock it is, industry, blah blah blah. Maybe they just right. I don't know, right? So there's a ton of different things we could examine. That's just off the top. S&P is like my benchmark for everything. If the stock doesn't look like the S&P, I'm like, why y'all trading it? S&P's been simple this year. Every stock has not been simple this year, right? So why do we have a benchmark? Because it makes looking at all the thousands of stocks you could choose to select to trade. I like the stocks that match up with the S&P. So it fundamentally did, right? It still pulled back about 7%. S&P pulled back, 10%. So it's pretty close. Really strong week, right? A very, what do you call it? This isn't like perfectly a hammer, and technically we're still kind of inside of this bar. All right, and then we had a range up here, right? So we really didn't go anywhere. So it got stuck a little bit before the S&P, which is kind of interesting to me. 7.8. Let me look at the S&P real quick. So, or maybe it did. Let's see, 7. Okay, so 7.8. S&P was making those new highs. 7.15 pushed a little higher, started that move down. So 7.15 is when we started coming down. S&P started breaking lows. Right? See how like this candle was the first low that was broken. We did not break this low. We did not break this low. We didn't break that low. We didn't break this low. We did not break this low. We did not break that low. The last low before that we broke was here. Way back there. Right before we got above the band. Right? So I'm just kind of like, hopefully y'all can get what's happening in my brain. As soon as I saw that chart, I'm thinking about, does it match up with the S&P? It's like tattooed in the back of my brain, right? Like what the S&P looks like, because that's telling me something instantly about this stock. Okay, so let me go back to TJX. So it dropped, what was that? 7%. Did not even go low enough to hit its average. I actually think that's really good. I think that's really good. This is one of those for me that without a ton of analysis, just even here, we close above that band. Yeah, we're in great position to push to new highs, just like the S&P. If I go to the day chart, oh, sorry, that's the 4 hour. Ooh, the 4 hour looks a little crazy right now. Let me take everything off for just a second. Yeah, so look at that. We got stuck. I told y'all where we get stuck. We got stuck inside the bands. We didn't go anywhere. We ain't go nowhere. Bottom band, top band, bottom, trying to get above the average, back under the average. Like, this is where the market decides whether we're going to go up or down. Fell off the cliff with Japan. That was 8.5. That was the day. Everything is 8.5 right now. What happened since 8.5? 8.5, August 5th. What happened? All right. Ran up to the 20. All right. This is that classic move to the average. We tested the average, went lower, and then pop right back above it. So that was a little that was tricky. That was tricky. You would have thought, oh, we're at the average. S&P's moving. We should go. Something happened here. We gap down, and then we fill that gap, pop right back up. All right, so we had a gap, and then we filled the gap, and we really continued what almost in a perfect world and I don't know what happened, but in my brain, in my mind, the way I look at this stuff is like this drop here should never have happened, but it did. All right, and that was that was what probably would have gotten some of you guys trading this back bearish. And if you're not again paying attention a little bit to the VIX and just like what's going on with the S&P, you would have had like a little bit more patience to not assume this is about to just fall back and drop off again. All right, just pop right back up. So I don't know what happened there, but that's a pretty big gap. Another gap. Did we have earnings or something? Maybe it had earnings. Let me look at the 4 hour. So we hit that 20 here. I don't know what happened right here. Maybe this was earnings, but this was the drop, and that was like during when the market was closed. So, and everything else pretty normal. So yeah, I don't know what happened on that day. Okay, that's TJX. Looks really good. NVIDIA. NVIDIA is just, again, I'm going to say the same thing every time I talk about NVIDIA for the next year. I'm not even going to change the metaphor on y'all. NVIDIA is Shaquille O'Neal strength with the speed of Allen Iverson. AI is one of my favorites. That's what NVIDIA is. It's crazy the power this company has, the influence. It's connected to everything. It's big and it's fast. And I literally mean the volatility is high. Its beta is high. And it's the company that just everybody is buying. And they mama. My mama knows about NVIDIA. She's 74 this year. All right. Okay, so you already know what the quarterly chart would look like. Let's go to the weekly to kind of see. So very similar to the S&P. Almost the exact same chart. Tested that bottom band, gap down there. VIX volatility does not stay at 65 for 3, 4, 5 weeks. I don't think I've ever seen that on any chart. Bull stepped in. We got back above the average. Think about this bar right here. Tested just a pinch above the average. And buyers kept buying. I did a poll. We did a poll in our group, and we asked, like, what stock are you buying? Based on this dip, based on this VIX, very high volatility, reasonably super reasonable for you to just buy your favorite stock, get some extra shares because of that VIX spike and the rarity of it. 50% of the people was like, NVIDIA. All right, so where are we at now? If we close today, we don't know what the week will hold the rest of the week. But NVIDIA is the strongest behemoth monster dragon of all dragons. Y'all watch Game of Thrones, House of Dragons? This is what's the big one the one they'll never show because it burned down the whole city? What is that big dragon? The biggest dragon. This is it. Starts with a B. I can't think of the name. Golly. What's that dragon's name? Somebody gonna tell me. I know somebody just posted it. Balerion. Is that it? Balerion? Anyway, this is a huge dragon. It's a monster. All right, so we're getting back above the 1. Great sign. Again, I don't see any reason for us not to get back to those highs of 140. We still got to get through this week and see how the week pans out. But again, stock is bullish. If the VIX stays down at 16, everything is going to go back into like nice, easy, just slowly higher highs and higher highs. That's all we've done this year, right? So you got to love NVIDIA. Let's look at the day real quick. It's going to show the same thing. Yeah, it looks pretty much just like the S&P. All right. Right in here was that band to band. Like right in there was that to me fundamentally is the exchange from bull to bear. It's like a baton being passed. Yo, the bears are like, yo, we made some money. And then bulls are like, okay, can we make some money? We like, all right, cool. And then bears give the baton back. somewhere the baton is passed right in there. I know I've been watching a lot of Olympics like y'all were, right? Those races were crazy, right? Crazy. But that's what's happening metaphorically right in there. Mathematically, that's what's happening. The baton is getting passed back and forth. Right? And my mother will not stop texting me. She don't know I'm live, though. Hold on 1 second. Okay. NVIDIA. Oh shoot. What else did I have? NVIDIA. Amazon. Take everything off. Quarterly. Quarterly. All right. So where is COVID? COVID was back here? No. 2020. Oh, right here. Oh. Okay. Wow, that's pretty strong. Okay, so Amazon clearly, right, it got beat up this quarter. What was that? Second quarter 2022? Ooh. But it went perfectly to the bottom band. Did it ever really, like, as an investor, should you have been worried about it for the next like 5 to 10 years just being something that just is losing value? No. Because on the quarterly chart, you got to look at the longer chart. We never got below the bottom band. Now, if you start to see a quarterly like setup where you're getting quarterly chart after quarterly under that bottom band, yeah, you really need to think about if you want to stay investing in that company. I know everybody thinks investing is like it's easy if you pick good companies and stick with the popular blue chip growth stocks. Like we could talk about all that, but it's possible for like investments to be bad investments. Yes. And you can see it happening on these longer time frames. All right, so Amazon, all right, got back up to its highs. Weekly, let's see what it looks like. Ooh. Okay, so that ooh was because it got hit a little harder. Got hit a little harder, right? S&P, TJX, Apple, everything we're gonna look at pretty much on a week chart hit that bottom band, pop right back up. Amazon tried to get down to that to its 200 period on the week. All right. So even when it went lower, at least you knew the 200 was down there, right? So it should have, if we're specifically looking at this, even though we may have, it was earnings. Yeah, a huge gap like that is like, yeah, that's earnings. Okay, so it was earnings. Let me go to the 4 hour. Yep. As a matter of fact, let me go to the hour. Yeah, right in there. Yeah, earnings. Bloop. Drop underneath the band. It was already there a little bit before, but that's the hour chart. You don't want to try to trade earnings off the hour, right? Don't do that. But yeah, we just went down, so that makes sense. Okay. And if I go to the daily, to see where we are, ran right back up to what? To the bottom band, to the one. We always gonna run to the one. All right, you start breaking highs in a downtrend, we're going to the one. You start breaking lows in an uptrend, we're going back to the one. And then right now it's trying to make that move. Right, we're trying to get back. Well, we're above the 200, above the average a little bit, right? But still, I don't like that this the 20s angled down, which isn't terrible. It just right. That's because earnings pulled this data down. Right, earnings said, "Oh, I'm gonna pull you down." Right, it's like tug of war. So it makes sense that it's angled down, even though it only really went lower than what the S&P did because it had a bad earnings. And so far, we've been recovering well. People have been buying. We're back above the average. We got right back. Right. Did not stay down there long. That's a good sign. Wait, let me go back to the week real quick. Oh, and yeah, the week is like inside this big bearish bar here. But again, that was earnings. All right, so we get above that. We get above 190. I think we're in pretty clear sailing to just let the math and statistics and all this that I'm talking about, let a great company continue to be great. But we got to get through this average. We got to get above 182, and then we got to get above 190 before we can get to 200. Let me check. Check y'all real quick. I'm trying to get in the habit of like looking back real quick to like see if anybody's asking me something. Okay. Dang. Oh, I got a couple questions. Dang. Oh, shoot. Okay. Oh, y'all said a lot. Oh, okay. Okay. Wait, I can't even see everything. Hold on. Let me wait. Let me look at all this. Okay. Oh, okay. Weekly. So, oh, Nvidia was week. Okay, I looked at the week. So cool. Nike. I brought up being petty because someone said it was dead when it dropped to the 72 ish a month or two ago. I looked at the levels the financials just went through for June 2025. It pissed me off because it was an obvious win for his audience. Okay, that's interesting. Text me and let me know. Okay, and I'm gonna look at Nike in a second. Okay, let me think about that for a second. I'm being petty. Yes, I know you will be petty and be petty in front of the whole world. I love it and I hate it. I love it though. Brought up being petty because someone said it was dead. Somebody said Nike was dead when it dropped to the 72-ish a month or two ago. Oh, okay. So 72. All right, let me just look at Nike now then. Let me just do that. And then I'll come back to the chat. I'll come back. But let me just look at Nike now. 72. What did whoever you talking about see at 72? Let me go to the quarterly first. Oh, I ain't looked at Nike in a while. Well, let me take all this off my chart. Okay, Nike's fun. Okay. Let's see. I cannot miss these old lows of COVID. Right. Always want to just look at basic support and resistance. If I took everything off my chart, nothing on it, you still should high and low. Right. That's just like. Right. And I know you probably know this, of course, but trading 101. Look back at the last major low or high. We might just be going there. A lot of times we are. So this was the COVID low. I'm on a quarterly chart. Had two really good years, right? That 2022 was a bad year for everybody. It looks like we stayed in this. We popped above, but it's like we stayed in this range. We came. Popped above and came right back, tested it again at 120 area. So it made sense that we came back down to 80. And wait, what was the comment? 72? Where is 72? Let me put a line at 72. And then what did they say? They said it was dead at 72? 72. Put a line at 72. Make it thick. Okay, so that is 72 right there. I don't have any indicators on my chart though, so I need a little help. Bam, got some stats. Let me look at the yearly real quick. Just curious. Oh. Okay. So this is an interesting one, right? Because if I'm really like doing what I normally do, which is even if I'm trading, I'm still going to pull up the yearly. Like if I'm doing like a deep dive on the stock, I might spend a couple hours just here on the charts, not even the fundamental stuff, not, looking back at earnings and just all of the fundamentals, looking at the balance sheet, all that stuff you can do. Thinking about this business segments, competitors, just like what's happening in the news, what's going on with it. Before we even get into all of that, I'm going to go here. Right. This for me, I know it's rare, but we have stocks, great big, the companies we love, stocks like Nike that will pull all the way down, get really close to their average or the average, and go right back up. Now, of course, fundamentally there has to be some good things happening in the company for that to happen, right? So I don't like that Nike is so it doesn't match up with the S&P. Again, y'all already know like my basic kind of parameters for stuff, but I will say this, if I go to the quarterly chart, that 72 was under the band and it was on a quarterly. But think about what I just said a little bit earlier. What I said earlier was you can almost connect it to whoever this other person is. They said 72 was dead. 72 is not dead. One, because even on the yearly, we're still above the average, right? So if we're talking like you're an investor in Nike, it hasn't even touched its average yet. right? So the time frame we're talking about really matters. Now, if I'm on the quarterly though, what I did say was if you start to see that downtrend happening, developing on the quarterly, that's a really, really bad sign. Have we developed a downtrend under the one? No. We haven't developed a trend under the one. We just poked under it. One candle went a little bit lower, really back to those lows of COVID, which still is support. People remember that. People are seeing that. And the people who love Nike are like, hey, 72 is a great place to buy. Anywhere down from 60 to 70, I know some really, really amazing long-term investors. They're looking at 60 and 70 and they're like, yeah, I'm getting some more. Right. Now, these again are the people who know what's happening in the company. And they're not just purely trading off like technicals or investing off technicals. Right. But if fundamentally they still believe in the company, we're just back at these lows. Now, I will do this though for fun. If I go to the week chart, goodness, people are just texting me like crazy. I gotta cut my phone off. If we go back to the week chart real quick, right, then here, right, this show is called Inside of Trading, right? So in here, we're under, like we went underneath the 200. Even that alone is telling us something. And right here, like this was such a classic sign. What is this? We touched the 200 on December 18th last year and pulled right back inside the bands. Like hard, strong week. Tested the 200 coming back down. If I would have saw that then, I'm telling y'all how I think, I would have looked at the week. I would have looked at the quarterly. I would have said, we're probably going down to the bottom band on the quarterly. We might have enough gas to get all the way down to, again, regression to the mean, pulling back to that 20 to the average, even on the yearly. It's all the same move. The charts layer, they're a little different, but it's really all the same stuff. Right. So, if we're here, yeah, you right, could have made some money to the downside for sure. But when people talk about like a stock being dead, usually, I mean, y'all know how this goes. They're usually just being sensational. Right. Every YouTuber is like, oh, this is dead. Oh, this is demolished. Right. Somebody at some point is going to pull up videos of me and be like, no, somebody demolished Noble. It's all just sensational selling of like hype to like make you feel like something is just so important. Is Nike dead? No. Again, year chart hasn't even touched its average. You really can't worry fully about the long term if we still above the average. It's still above average, right? That's kind of like what it means to a degree, right? It's still above the average. And I'll say this one last thing too. This candle right here, look at this candle. Look at that year. We're still inside of that year. And think about that. 2020 made those really strong COVID lows. Now, I will say this. We get under those COVID lows, which just happen to perfectly be at the 20, at the average. If on the year chart we start crossing the average, that's time to worry. That you might not be dead, but you got some broken bones, and you having some heart palpitations, and you might want to call the family in. All right. Okay. So that was fun. Let me go back. Okay, yeah, that was fun. Let me see. PayPal. Okay, PayPal 1 hour. Annette said beta was 0.63. I don't know what we was talking about. Sorry, beta's 0.88. What was that, Annette? What did Annette tell me she wanted me to look at? Wait, what did she say? I gotta slowly scroll back up. My mouse be moving too fast. Wait. Oh, maybe I was talking and asked a question. Yeah, the video was easy to trade if you weren't scared. I was scared. Got you, yeah. Well, see, that's the thing, right? That's that's where this Noble Woods system, it really does, like, I think about it for a second, just for 2 seconds. Like, why do we get scared? Because we don't know. So the only thing that really can undergird the fear that all of us feel, I feel it even now. I still sometimes get a little, like it happens, right? Um, the only way to like, or at least for me, it's like that really deep grounding in this like statistical lens, right? It's like that's what gives me the confidence to be like, I feel fear. My chart, my indicators, like what I'm seeing does not tell me that I should feel fear. All right. So I think that's the benefit of a really, really good system. You can check your fears. There's no reason anybody should have really had any fear with NVIDIA. Right? Not really at all. Now Nike, we just right. Nike looks a little different. Damn, it's under the 200. It's it's not at its highs while everything else is back at its highs. Blah blah blah. Right. So that's a little different. Right. Um. Anyway. Okay. Right. Mark said, "Would you do cover calls or straight options on NVIDIA?" Um. I don't. I'm like, I know what I know. Um. I don't really do any cover calls at all. Right. So that's a limitation of mine. I haven't. I like when I got really into options. I kind of was like, let me almost, I don't say master because I don't know if that's the right word, but let me get really proficient with and go like step by step. So I started on the buying side. Like I didn't even touch cover calls. I was just, what is buying a call? What is buying a put? And then what is a vertical? And then what is a straddle? And then what is a strangle? Right. This year I'm kind of like trying to like get myself to a different level with like iron condors. I know how they work, but the math is a little for my brain. Something about the math just gets weird. So yeah, I would be doing just buying straight, straight options, straight calls. Me. All right, me. I don't know everything. Right? I'll tell y'all the stuff I don't know. Oh, and haven't done, right? I ain't gonna sit here and act like I've done everything. I don't do everything. I don't. Um Ed, why do you compare Nvidia's movement to the S&P movement instead of NASDAQ? Um, that's a good question. You can compare both for sure, Ed. I tend to look at the S&P because it also connects to the VIX, right? If the VIX was tied to NASDAQ, I think we'd be a bit more emotional, right? It's not all the sectors. It's a little more tech heavy, a little more volatility, right? NASDAQ futures move faster than ES futures. So I like the S&P because fundamentally we're tracking everything connected to the S&P. Every stock's beta is connected to the S&P, not NASDAQ. So it's preference in that sense, but I also think it's a logical approach because again, everything that we start talking about the VIX, it's compared to the S&P. What are people buying the S&P? Okay. Oh, that beta was for TJX. Oh, it's that low. It's 0.88. Okay. Okay. So yeah. Okay. So that makes sense. 0.88. Yeah. So it did, and that makes perfect sense, right? So that TJX stocks beta was 0.88, which just means that if the S&P dropped 10%, perfect matchup. It's like 80% of that 10%, and it was like right at 7-8%. So that's like makes perfect sense. I think I was thinking the wrong way for a second. Anyway, I'm glad y'all gave me the beta on that one. Okay. Dang, I got a few more. What time is it? 9:45. Man, I told myself I was gonna be doing this an hour today. Oh, I wasn't doing it an hour today. Okay. Kava Group quarterly doesn't have a lot of data. IPO, what is this? April 2023. Quarterly. Not enough data to see Bollinger Bands on the quarterly. You need 20 bars, which is what? 5 years. You need 5 years of data, right? We don't have that. So going to the week. I must have looked at this for somebody because I drew this line some point in time ago. Really strong uptrend, small pullback right there. That week of 415. Y'all see that? All right. Instantly, I know what happened here. The VIX, which is connected to the S&P. That's how we can like see this fear when people start buying puts 30 days out. All right. And I would say, Ed, I would assume that there are more long-term investors who are invested in the S&P. I could be wrong. I gotta look at the data, but just because the S&P has been around longer, I'm pretty sure more people trust, in kind of like a general sense, you're going to even learn about the S&P before NASDAQ when you get into this, right? So, anyway, so that was when the VIX spiked up to 10. We know what happened here. It ranged for a couple weeks, right at the 20. That's interesting. And then we got that same move back up. And then we hit what? It hit new highs today. So before the S&P hit its highs, it's already hit new highs. Let me look at the daily real quick. Oh, yeah. So see that box that I drew on the weekly? All right, that was just right in here, pushed up, hit the 20, hit the average, kind of dropped. I don't know what's up with these. Maybe was this quarterly earnings too? Let me check. I don't know what happened right in here. Let me just put my little quarterly thing on equities. Show corporate actions. Did we have any earnings? No. Oh, no, earnings are way back there. Okay, so that wasn't earnings. Okay. So yeah, it just gapped down, filled the gap, made a new low. Oh, that was 8.5. Okay. I'm sorry. I wasn't linking that up to 8.5. So Japan VIX spike, blah, blah, blah. It spreads through the market, pandemonium, fear. Oh my God, the VIX is at 65. We're about to all die, and the world is about to be an apocalyptic movie. It's not. All right. The bands got really tight. Whenever you see Bollinger Bands get really tight like that, usually a big move is coming. We exploded to the upside, back at new highs. Yeah. Kava Group's doing really well. I would expect it to keep going up. When we break one of these daily lows, though, probably going to run back and test top band. Actually has to. At some point, it's going to do that, right? So right now, this is one of those that, really, honestly, all of these, if if you had the right system to see it and knew what to do, you could have made money on the downside for most of these. The ones like Nike, right, clearly different, but again, that's why I love connecting everything to the S&P, because you're really like almost taking the same trade, seeing the same thing across all the same stocks. All right. Okay. PayPal. Let me check the time frame she gave me real quick because I don't remember it. Where's it at? Oh, 1 hour. Okay, cool. 1 hour. I haven't been looking at 1 hour, so gave me a reason to look back at the 1 hour. I'll just jump to the quarterly real quick. I did a really good session the other day. This is like what, episode 49? I think it was 48. I used PayPal. Y'all, please go back and watch that one on PayPal. Well, I was talking about these 3 key levels. Still using the same tool, right? I'm just trying to get y'all more and more depth every time you see me with these Bollinger Bands. I literally can do, I've said this before, I could do a 10-hour class on just Bollinger Bands. Easy. It's that much information in them. So let me remove that. So this is the quarterly, right? So post-COVID, huge crash, right? This is really ugly. But notice, think about what I said too. Like, remember what I said earlier? I said if we're getting a series of like we're going lower, we pull up, hit the 20, we go lower again. We're just underneath that bottom band. Matter of fact, let me show y'all maybe on like a day chart real quick. Like this type of stuff. Right? Like, see this right here? Like, see how we're just lower. We hit the 20. We hit the band, we go lower, we try to push up. If you're seeing that type of pattern on the quarterly, yeah, the stocks is dead. It's dying. That's just now as an investor, you just really got to trust it and keep investing and just wait. It might be in that downtrend for 5, 10 years. It happens. Ford was in like a downtrend for like 4 or 5 years before COVID. That's a long time to be waiting for all your money to start working for you, right? So, okay, so let me come back here to where we are now, though. I'm gonna take everything off my chart real quick. So y'all saw, if I go back just for a second, you saw on the quarterly though, we're just down there. We not. Look at this. Like that's just. I mean, it's just sitting there. That's freaky to me. I don't even. I don't even like. I hate that. I'll go to the week. Week is kind of choppy. Pushing up, right back in the bands. Pushing up, right back to the 20. Pushing up, right back to the bottom band. Pushing up, never right. So when a stock is like this choppy, it's kind of telling you like we just don't have the mix of all the things you need for a trend. We don't have enough people believing in this thing. So people are just trading it in and out. There's no consistency with anybody. Nobody's holding trades on this right now. That's why it's so choppy. I would not be trading this. I would just find something that looks way more clean that I can trust and lean into around the same price. And don't be like emotionally connected to your trades. Investments, yeah, there's a little emotional something there because you should believe in these companies and like really view yourself as an owner because you are. Trading, I don't care what it is. If it makes sense, I'll trade it. There's no emotional connection. I will turn and cheat on PayPal in 2 seconds for someone better. Yes. All day. She ain't acting right. I'm out. It's very simple as a trader. Right. So who asked me about this one? Let me come back. Was that Yolanda? Who asked me about PayPal? Oh, Yolanda asked me about PayPal. Yeah, be careful with PayPal. A lot of stocks look hell of a lot better than this choppy, going nowhere for multiple years, stuck at this bottom band on a quarterly. It won't just drop and die, but it won't actually really get back up. Like this is the stock that's just right now. Like if it was a person, it just has the flu and it's not feeling better. It's not getting worse. Every day you look at it, it's just laying in the bed coughing. All right. So, yeah, be careful. I want you to make money. And when you trade stuff like this, you're making it harder. Because right now, the information you're seeing is telling you we just don't have what you want. Now, will it come? Yeah, it might come. This might be the all-star of like 2 years from now. PayPal may be like the darling of Wall Street with an amazing story about how it came back. Right now, we're living in the present. Right now, it does not have that story. Right, it's here. Not dead, but if you kick it 1 or 2 good times, she's going lower. And then investors got to really wonder why you're still in this stock. Traders just going to be shorting it. All right, so, yeah, okay. I guess I can. I said all of that. I didn't go back to the chart. This is the only time I think this episode I did that. I'm so trying to get better with not doing that, but and I'm sorry. I don't even know when was the last place you guys saw my chart. So I'm gonna just real quick show you the quarterly. All right, so this is what I was saying. It's at that bottom band. It won't drop lower. It won't die. Not that I want it to die, although I don't like PayPal because I used to use PayPal. I don't like how they do their business clients. I really don't. All right. I'm about to get rid of Stripe too. Whole different conversation as a business owner, right? So I really don't like PayPal. I hate to say this, I low key am like, that's what y'all get, right? Because they don't protect their business owners. They really don't. They're kind of more consumer centric, and customers will lie. Like customers are not always right. That's the craziest thing I ever heard. Customers can be crazy. just like business owners can be crazy. All right. So again, it's just down there floating. Just down there, just chilling inside of this really bad quarter right there. We're just all right. Yeah, this is bad. Oh, and then weekly chart, it was just real choppy. Just top band, bottom band, top band, bottom. Ooh, a little bit of move, up, back, up, down, up, down. Like it's just there's no trend. It's just all right. So that's tough. Okay, last one before I go. Darling of Wall Street, Apple. You already know what the quarterly looks like. It looks beautiful. Shoot, I can show you the yearly. The yearly is just as beautiful with Apple, right? Strong volatility on the year chart, strong, great volatility on the quarter. You can see that. All right, weekly, what happened? Came down, bounced perfectly off its average. Oh, you gotta love that. Regression to the mean, regression pulling back to the average. Statistical phenomenon happens on everything. Push right back up to the top band. I'm actually glad whoever asked me to look at this one. I got to check some more stuff, but if we get above this candle tomorrow, sometime this week, that right there is that move back to the highs. All right. Right there. Start pushing there. We only will like, and think about this. This is why I really encourage you guys to heavily consider clicking on that link, watching the videos where I break down and getting all the sales information about the class coming up, because even if I just explain to you what's actually happening when we break the high of a candle, there's a whole little like world happening every time we break one of these weekly highs. Right. And so it's pretty easy for me to connect the dots between different time frames, because I actually understand, like, when we're here breaking this high, I already know what the daily chart looks like without even looking at it. I know what the statistics on that day chart looks like. And I could do that or teach you that 30-minute, like 5-minute, 1 minute, the same thing. Every time we break the high of a 5-minute candle during the day, I can tell you exactly what's happening on the 1 minute. Right. And so I think that gives you just more confidence, right? As you go, as you learn and trade. Make and lose money. Make and lose, because you will lose. Right? Happens to everybody. Okay. Let me see. Did I cover everything? New live class. Click the link below. Pop your email address in. You'll instantly get the link to watch the video where I talk about the class. You got a ton of information. I got some customer testimonials. You really want to learn, like, what is it that I do? That page will give you really clear information on what I teach, why, the structure, pricing, all the things I'm going to cover in class. I teach you how to place the orders. I teach you all the definitions. You get quizzed. It's a tough 4 weeks, but it's powerful. It's powerful. I just tried to create the best class out. I'm pretty sure I have. So we talked about the VIX and S&P. We talked a little bit about options math, strangles. You could go both directions. Did you know you could go both directions? So stay tuned Thursday. I'll make sure I give you the actual date and a link for this upcoming math fun workshop. It'll be interactive. Bring a calculator. You'll be calculating. You'll be doing some work. But I want you to come away with a greater understanding of the power of options. And it's 5th grade math. It's 5th grade math. It's the concepts that are tough. Unless we start talking about iron condors, which for some reason my brain just is not picking up as fast as I would like. And I really haven't been studying them like that for real though. So I just got to put in more time, just like you. All right. Every time we raise our commitment level, right, there's something that happens. So thanks for checking me out. Share this video with somebody that you know and that you love. Come back next time, Thursday. I'll be doing this again Monday and Thursday all this month. Taking a break because my live class will be September, and then I'm doing a futures class in October. I'm probably just going to relax Thanksgiving to Christmas, get ready for the new year. I'll bring this insider trading back really strong beginning of the new year. And I'll do some throughout, but I wouldn't want to try to do this and service and really make sure my class, my students get the attention they need, right? So just for this month. But hopefully these are helpful to you. Come back Thursday. Click this. I gotta learn how to be a YouTuber. Click to subscribe. Make sure you're getting every video that I put out. Click the like for this video. It's going to help the algorithm to tell more people that some people are like enjoying what they're watching. So that matters. It helps. And I think that's about it. Hopefully I'll see you in class, or I'll see you next Thursday or this Thursday. I'll see you in my workshop soon. Please consume everything I'm giving y'all, because I'm telling you, there is nobody out here teaching what I'm teaching. It's not. Especially not with the masters who love stats and made 6 figures before 30 legally. I'm out before I start some trouble. See y'all later. Peace.